Hello, good morning Startup community. Hope you're all having a good morning. Welcome, thank you for tuning in here. We're doing our first live MadeSimple Q&A to this community, and this morning I'm joined by the Funding Options CEO Conrad Ford. Quick wave from Conrad.
Hi there.
Thank you for joining us, Conrad. So I've got a list of questions here which I'm going to be asking Conrad, all about funding options, about finance, and how funding options can help small businesses get the finance and funding that they're after. But if you're tuning in live, please do ask any questions throughout as well. So if you are watching live, you can just comment on the video below and your questions will pop up and we'll make sure that Conrad answers those for you. So, Conrad, before we get started, do you just want to introduce yourself to the community, to our customers here, and tell us a little bit about yourself and your background?
Hi, so my name is Conrad Ford. I'm the founder and still chief executive of a business called Funding Options. So I've started my own business and I know what it's like. Prior to that, I actually used to work in banking while it was still respectable to be working in banking. I worked in the group strategy team of one of the major banks, which meant I got to see pretty much everything that happens across a big global bank, which was quite an exciting role, albeit very different from running your own business.
Yeah, definitely. So where did the idea of funding options come from?
Well, I was actually working in banking at the time that the credit crunch kicked in, and those who've been around in business will know for a long time will know that that was a really difficult time for businesses, particularly in terms of getting finance. So there was a period, we're probably through that period now, but there was a period when the banks pulled back very aggressively from lending to businesses. And I began to think, well, there isn't the equivalent to a money supermarket for business lending, and why is that? You know, surely there should be such a thing. I now know, having tried to build it, because it's very difficult to do, that's why.
Okay.
But
still, you took on the challenge.
I did, I took on the challenge, and it was really a reaction and thinking there's a real opportunity here. We have an enormous gap, literally hundreds of thousands of businesses each year that are being underserved by their banks. And it was a great opportunity to get in and try and solve that, and it's something I also find interesting, exciting myself.
Fantastic. So just tell our community a little bit more about funding options and how can you guys help small businesses specifically?
Yeah, so Funding Options, we're really like a comparison site for business lending. But I think the difference between us and, say, for example, buying your travel insurance online, which we're all doing at the moment, the difference is that when you're going and buying your travel insurance online, if you're a fairly standard individual, you know, you're 30 years old and you're going to Mallorca, it's really easy to do, and you just go online and get the cheapest quote, and there's hundreds of quotes.
Yeah.
Business lending is subtly different, and the reason that is because the first challenge you're really asking is how can I get finance? Because if you've been rejected by your bank, and hundreds of thousands of businesses each year will be rejected by their bank, the first question is essentially how can I finance my business? And then if you're lucky enough to have a whole range of options, then you get to shop around and get the best deal or get the fastest finance. So how we approach that is you come online to fundingoptions.com. And you're simply asked a set of questions about your business, about your circumstances and the finance you're looking for. And actually a bit like a dating site, we filter down to the most suitable lenders in the market. So the analogy I use there is, you know, here in London where I live, there's a million hot singles, but how do you find the three to actually have dinner with? That's the problem we're trying to solve with funding options for business lending.
A challenge that everybody has, I think, here in London.
Well,
I guess the biggest challenge is as well that all businesses are totally different, aren't they? So there's no one situation.
That's exactly it, and that's actually why business lending is so hard, and actually why our banks find it so hard, actually, because for them it's really a question of economics. If they have a small business customer, and they have, you know, the biggest ones will have approaching 1 million small business customers, it doesn't make sense economically for them to have specialists who are specialists in hairdressers or haulage firms or construction firms. The economics just don't make sense. So they tend to have what they call local business managers who are local. That's the great advantage, but they're not a specialist in your sector. And that doesn't really matter when you're looking at, say, your current account. You know, all current accounts are fundamentally the same, but when you're looking to lend to a business, it's really important that you understand the characteristics of that business. So our banks will tend to take a bit of a one-size-fits-all for smaller businesses. So the solution to find the right finance, if you can't get a loan from a bank, is actually find somebody who understands your sector or your segment or your stage. So find a lender that actually specifically understands those characteristics and knows how to lend to your business. And that's the really hard thing to do.
Yeah. Okay, so funding options specialises in alternative finance. So just confirm what that kind of phrase term means, alternative finance.
Yes, alternative finance is a really fashionable term at the moment, and it has been for 5 years or so, really since the credit crunch. Alternative finance often gets associated with this very niche part of the market, which is something called peer-to-peer lending, which I'm sure we'll talk about later. But actually, in reality, alternative finance is anything that doesn't come from a high street bank. A good example there is we have quite a few what are called challenger banks, which are brand new banks, have come about in the last few years. So they are banks, but they're very different. They don't tend to have branches. They tend to take a different approach to lending. So challenger banks might be alternative finance. It might be big independent lenders that have literally been around as long as the banks, but they just do lending. So alternative finance is really anything but high street banks, and it's really important if you're looking for finance that you look across that entire market.
Okay, great. And how has alternative finance changed in the last few years? Has there been a big change in that whole industry?
Yeah, I mean, really two things have driven an extraordinary evolution and actually growth of alternative finance. On the one hand, the banks did pull back from lending to small businesses. There's no question about that. Around 2010, there was a real lack of lending. Now, since then, they've kind of climbed back into the market, but they're not as aggressive in lending as they were prior to the credit crunch. And actually, that's probably a good thing because history shows that they were doing some very stupid lending.
Yeah.
So on the one hand, we had withdrawal from the banks, and on the other hand, above all else, we've had the emergence of the internet. And of course, the internet, as it's transformed many aspects of our lives, is a great way of cost-effectively getting to customers. So you have some really clever new lenders that have actually utilised the internet in really clever ways to actually either get finance to businesses, find the right customers, or decide the risk of those customers. And I'm sure we can talk about it in a lot of detail. It's really exciting. But the internet and also the withdrawal of banks is what's created an enormous boom in alternative finance.
And it's fantastic for small businesses, isn't it, really, that boom has happened?
Yeah, it's exciting times, and it's really exciting for me because it kind of feels we're in the this is a really interesting time, and although the issue of business finance has been really politically charged over the last 5 to 10 years, in reality this is something that's been around for decades. Every 5 years the government will get some big grey-haired worthy to write a report about why SMEs aren't getting enough finance. And they will always write the same report and then it gets shelved and no one does anything. Actually, we are now at a point in time where it seems like the emergence of the internet and some other competitive dynamics are actually going to see a fundamental sea change in how businesses are financed. And the analogy I would give there is, you go back 15 years, we didn't know what price comparison sites were. They didn't exist.
Yeah.
Now, if you're a consumer buying a financial product, the most likely thing you'll do first is go to a comparison site. So the behaviours of consumers has fundamentally changed. And I think we're going to see a very similar thing happening with businesses over the next 5 to 10 years. And it's a really exciting time.
Great. We've covered this slightly already, but just again to go over in case people are just tuning in late. So what are the reasons why a small business might need to seek alternative finance?
Well,
you said obviously if they don't get a loan or finance off a bank.
Yeah, so first and foremost, we always recommend that businesses approach their bank if they're looking for finance. One of the dirty secrets of alternative finance is it's actually typically more expensive than your bank. So if you can get a bank loan, that's very often the best thing to do.
So you'd say try that first
We absolutely recommend you do. And actually, if the customer's got an offer from a bank, sometimes we can get a better deal, but not. I would say the majority of the time, actually, that's the best thing. And another important fact there, by the way, is that although we love to hate the banks, banks are highly regulated, so they are obliged to treat you well. Mm-hmm. Business finance as a whole is not regulated, and that means that we might assume that we have the kind of protections we have as consumers in business lending. Actually, generally speaking, you don't, whereas your bank has a certain fundamental obligations to try and treat you well. So bank lending is very good. So always approach your bank, absolutely, and listen to what your bank says. If they won't want to give you finance, often they may be willing to give you less finance, for example, or they may ask you for more information. So do listen to your bank. But at the same time, always approach alternative finance, especially, of course, if they say no.
Yeah.
And actually, the government tears their hair out with this issue because actually the majority of businesses looking for finance will only approach their bank. So each year, it's difficult to give a number, but maybe 50,000, 100,000 businesses will simply give up because their bank says no. And just think about how many businesses have gone under, how many jobs have not been created because of that. You know, we could solve the economic problems of this country overnight if we can solve this issue. So don't give up. If the bank says no, go to the alternative finance market, but it's because there's highly likely that there's somebody out there, a lender out there, that actually understands how to lend to your business.
Okay, fantastic. Good advice there. So what about if a company, let's just think of a few situations there that our members might be in. If a company is in need of urgent finance, is there anything that you can suggest or provide for them?
Yeah, absolutely. I mean, urgency is something that banks do very badly, I would say, and I would hope that they would admit that. Banks tend to think of everything as you asking for 3-year loans. So if you need money really quickly, they'll say, well, okay, get an appointment with your relationship manager. Now, that's all very well, and there are certain situations where a business may put themselves, for the wrong reasons into that situation. But you can be a really good, strong business and need money quickly, and the banks don't really work to that. So a couple of real examples there. You might be a really good restaurant, you might have 10 years of trading, but if your fridge breaks down, you have to replace it really fast or that will take down your business.
Yeah.
Another one is you might have landed a major new contract and you need to hire staff or buy materials and the money's not going to come for 3 to 6 months. So there are situations where really good businesses need money quickly. The great thing about alternative finance is that often using the internet, new ways have been found to finance businesses really, really quickly. So we have customers we've managed to get finance actually in their account in less than 24 hours of them applying for finance.
Wow.
Yeah, we set a course record in May, in fact, and it was maybe a third of a working day.
That's insane.
So just some of the techniques that they use there, some really clever stuff going on. So for example, if you're a retailer or a hotel or a restaurant and you take lots of money on payment cards, well, actually you can get finance off your payment card terminal. And what that means quite simply is that they can see the data, they have control over the cash coming into your business, or understanding of the cash coming into your business, and they're willing to make an instant decision based on that transactional data in your accounts. Another one is if you have a big contract and you've got an invoice from a high quality customer, you can actually sell that invoice and get the cash now and not wait 60 to 90 days to get paid. So some really clever ways where literally you can get the finance in some cases in your bank account in 1 working day and sometimes less. So some fantastic solutions out there if you know where to look.
Yeah, definitely. I'm just going to put in a quick question because Michael just wants confirmation. So would you categorise the government-backed startup loan as alternative finance?
Yeah, so we actually refer businesses to the startup loans company if they don't fit commercial finance criteria. So we are actually an introducer partner of startup loans, so we absolutely think of it as a form of alternative finance. And let's be clear, the government's put it out there to actually fill what they see as a gap in the market.
Yeah.
So for those that don't know, startup loans is a government-backed scheme where startup businesses or very early stage businesses can get relatively small loans on what would not be commercial terms. So if you wanted to get the money commercially, it would be very expensive and actually probably you wouldn't get the money at all. So the Startup Loans Company is a great government-backed scheme. Literally hundreds of millions of pounds have gone out from the government and been lent to entrepreneurs to start up their businesses. So it's a great form of alternative finance. And because it's government-backed, it's kind of safer than the average type of finance.
Yeah, and we're actually going to be talking more about that on Friday if anybody's watching. So you mentioned that you broke your record of how many hours, or a third of a day?
Yes.
Is that a realistic kind of situation, or is that common if need be?
It's certainly realistic because it happens.
Yeah.
But, if you don't leave it to the last minute, if you have a choice, right, that's the important point, right? If you think you're going to need finance at the end of the month to meet payroll, don't leave it until the day before payroll.
No.
I run
common sense.
Well, it's common sense, but I run a business and I've probably done worse. Right? So, the reality is, phone rings, it's an important customer, or it's an important prospect, suddenly you drop everything. So don't assume you can raise money at the last minute, but if you're a good, viable business and have certain positive characteristics, then yeah, you can raise money really quickly, but never deliberately do that.
No.
So that business, they'd got a new contract and they really needed to move really, really quickly on it. But it was obviously a degree of risk for them. They were lucky that we managed to help them.
Yeah. So
don't do it deliberately, but yes.
It could happen.
Absolutely, yeah.
I guess you've just got to tick all the boxes, haven't you, at the end of the day? It depends on your situation.
Yeah, look, I mean, it's funny. I'm an ex-banker. I'm also a qualified accountant. So I know full well the theory of what you should do, planning ahead and regular forecasting and all of these things, right? And I regularly lecture people on them. But actually the reality is when you're running your own business, that stuff does drop.
Yeah.
You know, it does get dropped a bit by the wayside. But yeah, I mean, if you don't have cash, if you run out of cash, your business goes under. Simple fact. So never let that one drop by the wayside. You know, if payroll's coming up, if you have important bills, you know, you must, you know, even if you've got an important customer, you must actually take that hour and actually deal with it.
Yeah, cash is king, as they say.
Cash is king, yeah.
So what about a company who's experiencing high growth?
Yeah, so high growth is another a whole different set of challenges, and one we see regularly. I would say sort of the bulk of our core customer base is high growth companies. So the first statement to make is that the banks don't like high growth, and what I mean by that is the banks will typically be looking to lend for 3 years, and they want to see 3 years of very similar performance for the business to look 3 years into the future. So when they look into the forward, they look through the rear view mirror. So if you're a really fast-growing company, you may not actually have 3 years of track record, and if you do, then maybe 3 years ago you were making £100,000 revenue, and now you're making £1 million. The banks find it really hard to actually just trust that those numbers are sustainable. So financing high-growth companies is hard, and what makes it doubly hard is actually when you look at the sectors that grow very quickly, on average, they tend to be ones that don't have what we call physical security. Now, what that means is traditional businesses would have things like vehicles like trucks, they would have machinery, they would have their own premises, factories and stuff, traditional lower growth industries. All of these things can be put forward as security on a loan, just as your house is security when you get a mortgage. Lots of high growth sectors, so things like digital agencies, technology firms, recruitment firms, PR companies, a lot of the high growth sectors, and unequivocally the highest growth sectors, like my business, they rent their offices, they have very little physical equipment, and their main asset is their people who could walk out the door that day. So these businesses are very hard to finance with traditional financing techniques, which really look at taking security against everything. Yeah. What you need to do is you need to find lenders who understand the cash flow of your business and are willing to actually look at the cash flow characteristics and actually say, well, okay, you may be a high growth business, but there's clearly a fundamentally good business. If you stopped growing, you could be profitable tomorrow. It's looking at things like that. The types of lenders doing that, challenger banks, the new type of challenger banks are doing lots of that. So they don't have high street branches, but they do have lending experts who have a full range of skills. A new type of lender called peer-to-peer lending does a lot of that. So there are ways to finance, but for those two reasons, high growth businesses are really hard to finance, and they're a very large part of our base exactly because their banks say no.
Okay, great. And what about businesses who have more complex financial needs? Do you come across that obviously a lot?
Yeah, absolutely. I mean, the bit that's not really understood about alternative finance is that the core of alternative finance is a huge diversity of special circumstances which make it hard for your bank to lend to. So a really example that we had a year or so ago, it was a really successful little pub, rural pub, great business, and they just wanted £30,000 to do some renovations during the down season to expand basically in the summer. And they were going to spend the money in the local economy, local builders, great story. A bank would have done that tomorrow were it not for one pertinent fact, which is the owner was living overseas. And then suddenly the banks, they're thrown into panic mode because they think, maybe we're accidentally financing terrorists or something ridiculous like that. But basically, for a £30,000 loan, it's just not worth their while. They've got plenty of other things to do with their money. So they said no, because it's too difficult, not because the business wasn't good. So we found a specialist lender who would step in there. So special circumstances. And it's really no different to us as individuals, So if you have a salaried job you've had for 5 years, you can walk into any bank and get a mortgage of X times your salary. It's really easy. If you're self-employed or if you run your own business, things are much more difficult, and you probably need a specialist lender who actually understands how to lend to your category. So anything where your circumstances are just a bit different, the banks aren't very good at doing that.
Yeah, they panic. Because a lot of our customers actually are overseas as well. So we have a lot of people overseas forming UK limited companies.
That's really hard, and for obvious reasons, the banks tie themselves in knots about that. I think the thing to understand about the banks is some of our banks, we have some of the biggest, most successful banks in the world, believe it or not. Hard to believe. And, you know, when they think about where they can lend money, you know, they might have a choice to otherwise lend the money in Hong Kong to medium-sized businesses or large corporates. So they have a whole host of things to do with the money. So if it looks remotely complicated, they just tend to say no. But you want to find a specialist lender whose basically entire existence is on finding businesses like yours and lending to those businesses, and that's how you'll succeed.
Okay, fantastic, really useful. So I guess we've covered this a little bit, but are there certain types of companies that you tend to work with more than others? Obviously, those high growth ones with complex financial. Do you see any other trends at all? Or
yeah, I mean, I'll sort of go back to my point around high growth sectors. We see a bit of a bias towards certain sectors, I would say. So a good example there is, let's say you're a haulage firm, where your financing need, stating the obvious, is to buy trucks or coaches or whatever it is you're hauling around the country. Well, actually, when you go and buy that, the chances are that you'll be offered finance on the dealer room floor. So if your business is good and viable, then finance is just there. You can either buy it for cash or you can rent it, effectively get a high purchase. So financing for those businesses tends to be very tied up through traditional means. The banks still know how to do that kind of lending. So it tends to be certain sectors in particular, you know, high growth sectors and difficult circumstances like, you know, overseas, export, imports. These are all really hard to do, and the banks aren't really set up to do them. So they do that very well if you've got £50 million turnover, but they certainly don't do it well if you've got £500,000 turnover.
Yeah. Okay, great. And what about startups in particular? Is there anything Funding Options does to help those? Or?
Yeah, well, I think startups is a term that's come to mean two distinct things.
Around, right, centre. We wrote a blog on it the other day. What is a real startup?
So I mean, this year, 500,000 businesses will start up in the UK, and the vast majority of those will be what I would call vanilla businesses, very traditional, well-known businesses. They're restaurants, they're shops, you know, they're plumbers. For that kind of business, it is possible to get finance commercially. That's something that we regularly do. And of course, there is the government startup loan scheme, which I'm a great supporter of, by the way. I think it's a great thing. So the kind of situations where you can get traditional commercial finance, in other words, private lending for a startup business. And so an example I'm allowed to talk about publicly, one of our public case studies. So a lovely lady called Shelley in Norfolk, and her dream was to have her own pie shop in the seaside town she lives in, called Shelley's Pies, actually, Shelley's Pies. So essentially, she was able to get commercial finance because she was not buying the premises, she was renting a premises, so there's not an enormous upfront cost. So the cost you're looking for to cover is really refurbishing a unit that you're leasing and creating a kitchen and basically a nice place for customers to be in. So you're talking about low tens of thousands of pounds. You can often get finance for really simple to understand and well understood sectors like that. But generally speaking, just to be absolutely clear, generally speaking, if you're not a homeowner, that makes it a lot more difficult if you haven't got a guarantor. I've never fully understood the value of getting a guarantor because if they've got the money, maybe they should give it to you. Yeah. Some traditional types of businesses, if the money you're looking for is relatively small, yes, it can be done, and never discount the government startup loan scheme. The other use of the term startup is what I am, which is kind of the cool, funky tech startups, of which there's very few of us, and there's no way we get finance from traditional lenders. We shouldn't do. Frankly, any lender that lent money to that kind of startup is not going to last a year. So they get money from equity, and I raise my money from private investors and later from venture capitalists. We're a different type of business, and frankly, Funding Options doesn't help businesses like that. It's a very rarefied area of the market, and there's only a few hundred businesses each year that will actually.
Okay, so that's a whole different section again.
Absolutely.
Okay, good to know. Okay, great. Lots of really useful, interesting information there about funding and finance. Let's just talk a little bit now about your situation, because you said you're a founder, you've started up businesses from scratch, so you know exactly what it's like being a business owner. So what piece of advice would you give to our community members, so someone who's just starting out in business?
So,
there's lots of advice you could give.
Yeah, but there's one that just overrides every other piece of advice, which is basically every time I've kind of waited before I actually, tried to get customers on board. In other words, tested my idea every time. It's burnt me. There's a very famous book called called the lean startup. And what it basically says is you need to get into the market quickly, you need to test your idea with real customers. And I actually had a good understanding of this theory, but I decided I was different. In my infinite wisdom, I decided I was different. I had a strategy background. My market analysis and surveys were enough. So I don't think I actually had my first customer until we're talking like 9 months, 12 months after I'd actually founded the business. I actually had my first customer, and suffice to say, it did not go well. So get into the market quickly. No business plan will survive first contact with a real customer. When you actually have a real customer, that's when you'll understand what the customers really want. So that's my overriding piece of advice. It's a mistake I've made repeatedly, albeit less and less as time has gone by, thank God. But yeah, it's a common piece of advice, but I can only reiterate it from my own bitter experience that it's a very good one.
Get in there quick.
Yeah.
That's when you start learning.
Absolutely, yeah.
Fantastic. And are you happy to share with the community your lowest and highest points so far? Is there anything that kind of sticks out in your mind? Have you had
I've had plenty of lows along the way. Look, if you're a business like ours that employs staff, it's actually pretty rare that there won't be a moment at some point in your life cycle where you're not even sure you can pay the staff at the end of the month, right? And nothing is lower than that, right?
Yeah.
Because you agonise whether you should tell the staff, but if you tell the staff, they might all leave. Blah, blah. So I'm long past those days, thankfully, but I have been there. So nothing beats. In terms of lows running a business, in my experience, nothing beats. That's the kind of thing where you go on holiday and you're not really having a holiday.
Yeah.
Not being sure you can pay the staff, knowing they rely on you, is a really hard one. And if you're not mentally equipped to do that and think hard about that, then you probably shouldn't employ staff. Maybe run a lifestyle business. It's hard.
Yeah. So many other people brought into your situation.
Absolutely.
Today, so
Absolutely.
Not just you.
In the early stages of funding options, I always had fairly candid conversations. We had great people joining us, often really high-flying people with great jobs, and I'll basically say to them, look, join us. Think of this as a 6-month contract, because that's how long I know for certain we're still around for, right? Mm-hmm. If you're happy thinking like that and you understand that's what the scenario join us. And interestingly, actually, that you end up hiring exactly the kind of people you need in a startup, which is people who want to change the world. They're not joining you for a salary; they're joining you because it's interesting and exciting. Mm-hmm. I was always very candid with people joining the business in the early stages. I never pretended, that we were guaranteed success. I basically said, we're trying to do something interesting, exciting, and if that's for you, join us. If it's not, don't. Because ultimately, you don't want people joining you who don't understand, what they're signing up for. Because ultimately, it will always end badly. Yeah. And frankly, you'll waste a lot of time and money getting to the inevitable result of them leaving. Low point wise, I'd say that's always the low, and I'm sure many business owners would validate that one. In terms of highs, actually, we've had a really good year. So my high is actually now, I would say. Believe it or not, so the government passed a law last year that said that when the banks reject a business for finance, they're going to be forced by law to offer them a referral to alternative finance. So this is the government's latest attempt, and I think probably the one that will work to actually unlock alternative finance for good. So it was actually announced in the budget that my business funding options has been recommended by the Treasury to be one of the platforms through which that will take place. But beyond that, actually, the business is beginning to really chug along quite nicely now. And actually, for me, above all else, I wouldn't have had time to come and do something like this a year ago. I now feel I've got a team in place where, frankly, they're probably better off with me out of the office. So I kind of feel I've got through the really hard bit of running a business, and I very much hope so.
Yeah, you're not working in it anymore. You're kind of working on it, or
there's
always that struggle, isn't there?
You actually find yourself in I was saying in retrospect, something I've thought about quite a lot recently. You find yourself in a virtuous circle, because in the early stages of running a business, a proper startup like mine, where you're actually trying to invent an entirely new market, right? So the vast majority of the decisions you make are wrong. Yeah, and the problem is you have so little time to make the decisions that actually you make more and more wrong decisions. But bit by bit, you chip away, and bit by bit, you sort of fix little bits in the business. And then you actually find that you have much more time to think about fewer decisions. More time, less decisions, and that only ends in a good way. You stop making bad decisions all the time, and generally speaking, most of the decisions you make are good ones. And I was actually thinking about this. I was on holiday recently, and it has been a retrospective. I think the last time I made a really, really bad business decision, like, one of those, like, what was I thinking, was, we're talking like, certainly not this year. So yeah, and it just feels like we've got, you get into a virtuous circle, whereas before, in the early stages, it's very easy to get into a vicious cycle because you don't have the time and you have too many decisions to make, so you make lots of bad decisions.
Yeah. Are you allowed to tell us that bad decision you made?
No.
Okay, and finally, so we'll end on this one. What's the one thing that you wish you'd known in the beginning?
That's a really hard one to answer, actually. I would just reiterate, I wish I'd known what I learned from customers, therefore I wish I'd started selling to customers earlier.
Yeah.
That's, I think, the only rational way to answer that question. The other sort of common piece of advice, which again I would absolutely endorse, one of the things you regularly read is you will spend more money and more time on building the business than you think. So, you should probably at least budget for double the money and double the time. That's absolutely true in my experience. In fact, that's probably worse than that. So it's something, frankly, you will be told when you're starting a business. So what I'm saying is, don't ignore that fact. It's probably true.
Listen to that piece of advice. There's a reason why everyone says it.
Yes, absolutely.
Okay, thank you so much, Conrad. That was an absolute pleasure talking to you. Some really useful advice and information there for our community members on funding, finance, and just about running their business as well. So hope you all enjoyed that, everybody. So remember, if you are watching this afterwards, because I know most of you will be, and you do have any other questions, do still comment below, and hopefully we can get those answered for you. So remember, we are having a kind of funding-themed week this week. So we're back tomorrow morning. And we're actually going to be in Crowdfunding's office, talking to them about, in Crowdcube's office, talking to them about crowdfunding. And then we're also back on Friday morning as well, talking to a business advisor from London Small Business Centre. And he's going to be telling us a little bit more information on startup loans. So thank you all for listening, everybody. And goodbye. Goodbye from Conrad. Goodbye from me. Goodbye.